Hi everyone, welcome back to Be Rich. Anand's away in Japan, doing wonderful things, I'm sure. Unfortunately, he's a vegetarian, so I don't know if he's eating much sushi though. And he doesn't drink Japanese whiskey either. He's a teetotaler, so on that account too. Anyway, fortunately, me and Sashwath are here, and we're here to entertain you and inform you. Hopefully, you wouldn't have left the channel by now, and you'll be still around to watch us, though Anand is not here with us. So, what do you have for us today, Shashwat?
Yeah, what I have for you is to talk about HSBC, which is a bank based off of UK and US, and this bank is listed in London. So I have for you today is some news about HSBC, which is listed in the London Stock Exchange, and you'll be able to buy it there. And I wanted to talk about this company because it's a bank which lends, and it's one of the largest retail deposit takers. So it has, I think, about like hundreds of billions of dollars in deposits, and yeah, it's a pretty big bank, and its biggest rival is Citibank, which I think we've covered before on this channel. So coming to the topic of why am I looking at this suddenly? Because recently there was an entire talk about buyback. HSBC had already announced a buyback, and they've again announced another buyback of $2 billion, where they're going to buy back shares worth of that much and extinguish it. And this comes right after the takeover news. There's a lot of talk on whether HSBC was going to have its operation split between Western countries and Eastern countries. And there's an Chinese activist investor who wanted for this and is pushing for this. And the shareholders, 80% of them voted for no. So it was a resounding no to this plan. But what has been happening is that HSBC has been trying to sell off its New Zealand operations, its UK operations, and fold up its European operations in favor of Asian countries. So they're making a huge bet on Asia, and they're deeply tied in with China, and they have about, I think, 13 point some $7 billion or something roughly to that, amounting to that, tied up in Chinese real estate lending. So they're in a tight spot right now because of what's happening in China in terms of its real estate market. So, despite all of that, because of the interest rate rise in their US and UK operations, which they still haven't done away with, they had bumper profits, and they've beaten their expected margins, investor expectations, and that's led to a huge rally in the stock price. So that's practically why wanted to talk about this. And they've taken all that excess cash and they've said we're going to buy back stock and give some of that money back to investors without actually paying it out in terms of dividend. So interestingly enough, HSBC Holdings offers a dividend yield of about 4.6 or 4.7%, and this is crazy high for a stock which is an equity asset which is paying out this kind of money. So I felt that it was an interesting buy and an interesting company to look at in general.
Yeah, I agree with you. And they made a huge killing when they were forced to buying into the bank, the UK arm of the failed American bank. They bought it for £1 or something for phenomenal amountly cheap money. They bought it for, and all the extra customers and extra customer base and all those deposits came right into HSBC's kitty. That too, with the raising interest rate, is just profit, profit, profit everywhere for these banks. And HSBC,
Yeah.
it is the right time for them. They've been going through some tough times, HSBC, with activist investor and running into all kinds of foul weather. They've always been termed as, the bank which most arms dealers prefer because of the offices in the east and the offices in the west and able to bridge globally. They've always been caught in the crossfires of all these controversies. They were able to get out of all this and also bring some value to the shareholders. I'm sure a lot of the shareholders are cheering this buyback on, because what happens when a
Yeah.
buyback is when you buy these shares back and you extinguish them, it pushes the share prices up. So
Yes.
if you're holding on to it, it pushes your share prices up and you feel very happy. Instead of giving a dividend payout or giving extra shares, bonus shares or bonus issues, there's another way you can increase value for your investors and shareholders, which is a fantastic thing to do. As far
Yeah.
as HSBC is concerned, HSBC is one of those banks you cannot really predict how it's going to go. It's not like one of those regular banks which we're all used to, because of the having different tentacles in different parts of the region, and having heavily invested in Chinese real estate, like you rightly said. and China being a black box, you really have no clarity on what is happening. Unless you are
Yeah.
cued into that market and you know what is happening in China, if you're a Hong Kong based investor or a Hong Kong based, financial person, you would have some kind of clarity on what is happening in China, how is the weather blowing, the winds blowing there, and you can base these judgments on it. That's why Anand, in the last video which we did about why he's buying Infosys and Dr. Reddy in the US and not buying it in India, why is he looking at also buying in the US? For the same reason. He says the problem is, though America is very transparent, though American companies are very transparent and they're well, their books are studied, and there is a lot of regulation there. You still can't see it. You really can't track these things very clearly. So he says when the few companies he's looking at are heavily overvalued, like Apple and all that, are heavily overvalued, like Microsoft, Nvidia, he feels it's too much. The price is getting a little crazy. He sticks to these Indian companies. Yes, when the market craters and everything corrects, all these companies will correct, but these companies will correct less more than the other big companies, which will correct even bigger. So that being said, right now, if you're an HSBC shareholder, it's good news for you. Would you recommend it to being a buy? I don't know. What do you say, Sashwath? Do you think you should be biting into HSBC right now?
I'll think about it like this. You have multiple options where you can put your money, of course. And let's say you have made up your mind and you do want to invest in an MNC type bank, which is basically taking deposits from everywhere and lending everywhere. So if you look at it that way, I'd say you can do one thing where you can buy its competitor, which is Citibank, and you can buy HSBC. And regardless of which one comes out on top, you're pretty much okay because it'll balance each other out, sort of.
True.
And if you do look at the valuation for Citigroup, which is your Citibank, its price to book is 0.48, and they're giving you a dividend of 4.5% roundabout, and its profit margin is 19%. And HSBC, which is also a rival company, which we're talking about right now, its price to book is 0.9, well below 1. And its profit margin actually is 42.8% because of the bumper profits which it came up with. But both of them look relatively cheap in comparison to a lot of Indian banks like your
Yeah,
ICICI's,
true.
HDFC's. So I'd suggest that, yeah, if you are looking into into diversifying your portfolio with a bank, then you can certainly consider buying both Citibank and HSBC, and sort of evening out your portfolio with that. That might be one option. Or if you think that one of them is going to pull out on top, and let's say you do believe in HSBC's story of trying to diversify into the east and trying to fold up operations in the west. So one interesting thing is that they wanted to sell off their France consumer deposit business, and this business thing was delayed because of rising interest rates. It's become even more expensive for the investors who are buying this to inject money into it, because now that your profits have gone up, they're calculating it in terms of a ratio. So if your profits have gone up by 100, then you have to multiply it by that ratio and pay that much more. So that's what's happening there. I think Cerberus is the group which wants to buy out their French operations. So
Correct.
they are making HSBC is making a bet, and depending on which bank you think will pull out on top, you can definitely buy that bank. Or if you think that both of them are something which you want to keep in your portfolio, that's fair too, because it's giving you almost returns on par with your treasury bills, whereas it's also a company like an equity share which you can hold on to. So I
Very
think
true.
that's pretty good value, because you have a double whammy of both dividends and whatever growth they are able to give you. Although I am quite conservative on growth, because I don't know what kind of growth you'll see in the Western operations, especially in the US and even in China. I don't know what growth they're going to see. So I'm not sure about the growth front, but in the long term, it seems like a pretty decent bet to make.
Correct. And both banks, Citibank and HSBC, are currently going through kind of, shedding the fat, as to say. They're trying to become leaner. They're trying to sell off operations which are profitable by some accounts, or trying to withdraw from certain markets, trying to get themselves more aligned and make them more agile as a banking unit. Because the way the global economy is growing right now and global trade is growing right now, people are getting more and more militant and more inwards. People are focusing. Countries are focusing more, closing their borders.
Protectionist.
Yeah, protection and closing their borders, and they don't want to open up anymore. So
Yeah.
these banks have to play it carefully because they are spread over a lot of countries and a lot of regions. So they have to play, devil's advocate in withdrawing from a certain market and entering certain markets, because you don't want to offend an important market. Let's say you're in America, and America is your major, you know, important country for you, and America suddenly feels like, these countries have become enemies now, enemies of the state, and we don't want to do business there. Like what suddenly happened with Russia because of what Russia did with Ukraine. It kind of offsets your whole forecast and what you plan to do for the next 5 years, 10 years. So these things, that's one of the main reasons why these banks, they want to withdraw from certain countries, keep their agility and their options open so they can move accordingly. And what Shashwath said is very true. You can buy Citibank and HSBC. So if one goes southernwards, the other one will usually go up north. So you can balance it out, and that way you kind of hedge your bets on both sides, and you're in the finance sector globally, and you can stay there. But one thing is, if you are an Indian investor, the kind of clarity you have with Indian banks, what you can see in Indian banks, that kind of clarity you will not have with HSBC and Citibank unless you're in that realm and in that space. So before you do decide to venture into that realm and space, make sure you do your homework. Just based on the news or me and Shashwat being positive about it, don't do that. Do look into the books of HSBC, read the history of HSBC, read about these activist investors, and read about Citibank and what Citibank is up to before you decide to venture into these things. As Shashwat has always said, me and him are not advisors. These are just purely our opinions and what me and Shashwat feel looking at this news. And we do think HSBC is going through some good times.
Yeah, and it's you can wait for a little bit and you can still pick up HSBC, but share buybacks are always a positive thing because, like Warren Buffett said, you want to buy a company which is going to make you money regardless of what they're doing, even if they're a cash cow. As long as they increase the amount of money they're making for you as the investor, then good enough. So Apple is a company like this. Coca-Cola is a company like this. Berkshire itself is a company like this, where
Correct.
the
It's been talking
conglomerate buy. Yeah. So
with
if a company
$140
buys
billion. Yeah.
yeah, so if a company is willing to buy back its stock and it's not doing so by borrowing, then I think it's a decent place to be.
Very true. Very, very true. Especially in banking, it's a wonderful place to be. Considering all things in banking sectors right now considered, all things considered, it's a wonderful place to be.
Yeah.
Anything else you want to add, Shashwat?
No, that's about it. So yeah.
Anyway, thanks for joining us today on Be Rich. I hope you found this video informative and entertaining as always. Please do think of subscribing to our channel and turning on the bell notification icon so you'll be notified every time we come out with a new video. That being said, thanks for watching Be Rich today.
I'm in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.